Hi traders, it's Zoran Kresovic here from Eightcap, and this week I will be talking about Euro USD. So it's been quite a busy week last week. A lot of fundamental data and macro news coming out. Markets were actually moving quite a bit, especially on Friday with non-farm payroll data coming out and beating the market expectation or consensus, and it came in at 250,000 jobs as opposed to the consensus, which was 183,000 jobs. Also, last week we've had ECB data, 25 basis points, and also we've seen Fed lift the interest rates of 25 basis points as well. This week, what I would like to talk about is Euro versus USD, and the reason for that is quite a bit of news coming up over the next week or two that could actually affect this particular pair. But also in terms of the US dollar versus the basket of all major currencies, around 57% of the volume traded is actually Euro versus USD, and the rest is all the other major currency pairs. So Euro actually has quite a bit of influence on USD, and in fact it is actually one of the most traded pairs here with us at Eightcap because our spreads are so competitive. We are a low cost broker, and clients do like to actually take full advantage of that. ECB lifted 25 basis points midweek last week, and that actually takes the terminal rate to 3.75%. Now, what the interesting component about the euro at this point in time is strong inflation trends support the euro, especially against the USD, as Fed obviously pivots away from the further interest rate rises or coming to the end of the interest rate cycle. So what that means for euro is actually we've seen euro appreciate, and what I've got here is a weekly chart at the moment. Now, once we discuss and analyze the weekly chart, then I will go down on daily chart to actually go into more nitty-gritty stuff. Now, fundamentally for euro, growth and monetary policy trends actually support euro at the moment, and that's reflected in GDP figures, also retail sales, because 2 weeks ago when the retail sales came out, they did come slightly lower and below the market expectation, but it wasn't actually enough for the European Central Bank to turn around and say we are on top of our inflation and therefore we will stop raising rates. Now, further rate rises in ECB stated moving forward will probably take effect dependent on inflation outlook, dependent on incoming economic data, and probably the strength of the monetary policy transmission as well, because European Central Bank is actually one of those that's been lagging a little bit in terms of the rate rises, as opposed to, let's say, Bank of England or Reserve Bank of New Zealand, and especially against the Federal Reserve in the US as well. So what that means is highly likely that at some point in the future, because the market is actually pricing another 50 basis point interest rate rise in euro, it could appreciate the euro against other major currency pairs. And what we're seeing on the chart here is from the lows back when euro was below parity on the week ending 26th of September 2022, we've seen euro appreciate quite heavily to the peak on 30th of January. We've seen some retracement there as well, and only to continue and further upside run to that resistance level around $1.12. Also, what I've done is applied the retracement from the low on 26th of September 2022 all the way up to the 30th of January 2023, and the market actually retraced only 38.2%. Now, if you apply that to the chart itself, what that indicates is there is actually quite a bit of strength in euro. Also, that's coincided nicely with the actual support level around 105 mark, and obviously once the euro made that trough, higher trough, major trough, it actually continued to go up and push to that resistance level mark. What I would like to do is actually go onto a daily chart for you guys now. As you can see, this is probably going into more detailed charts. We've also got the medium to long-term uptrend in play now. Given the fact that we are hitting the 50 day moving average on Euro USD, and it's hitting the major resistance level. And because it's actually had quite an upside run, we could potentially see a bit of downside on Euro in the short term. This uptrend line is actually providing a nice support base, and we could expect for the Euro to come back down to 108 level mark. That would be what is considered in technical terms a healthy pullback. Any further upside or any further talks of hot inflation in the Euro, especially with the energy sector, given the Russia-Ukraine war and retail sales coming up and also the actual CPI data coming up, we could potentially see Euro appreciate further up to challenge the resistance level mark. Now, if Euro was actually to continue the current uptrend and continue to go up, and there is no pullback, then this challenge here of the multi-year resistance level is going to play the key part. So traders do need to be a little bit patient, especially those that are actual bulls on Euro at the moment, because there could be some congestion around these levels. RSI, 14-day RSI, if you have a look at that as well, hasn't actually topped up to say that we are in overbought territory at the moment, but it is actually kind of moving in that direction. So that's something to consider as well when doing your analysis. So Euro is being quite liquid at the moment, and if the resistance level was to break from here, and Euro was actually to continue marching upwards, then the next level of congestion is around $1.17 to $1.20. So that would be the band where we could see Euro, consolidate. However, first thing is first, and we need to basically go through the hurdle of 111 to 112 mark before we could take that into consideration. Also, just to actually do better analysis on the downside, if this level of uptrend line were to be broken around $1.08, then the next floor or the next major support level would be around $1.04, $1.05. So Euro is actually, just to summarize, quite bullish at the moment. Obviously, respect the trend when we have to do that. Strong uptrend in play. Looks like more interest rate rises over the coming months as well from the ECB, which could basically push the Euro bulls to continue to go upwards. Any change of sentiment, or if we do see any pivot away from Fed and Jerome Powell and further strength coming into the USD, then obviously we would highly likely see some consolidation in Euro in the short to medium term as well. The last thing that I would like to actually recap, the big news on Wednesday. So this is the Acuity Economic Calendar in client portal at Eightcap. We've got consumer price index. That's going to be a huge news, and that's something that could potentially push the Euro against the USD as well. So year on year, the forecast is 4.4%. Previously, we've had a 5%, but if you have a look at the CPI data coming out on month-to-month basis, previously we've had a 0.1%, and the forecast is 0.4%. So that's the key impact and key news for the week ahead. Please pay attention to that, because they will generally move the markets in one way or another, and something to consider when you're actually applying the risk and money management in play. Happy trading, and I shall speak to you next week again. Take care.